Hello and welcome to this week's analysis, where we're diving deep into market momentum and really the huge story right now, AI. Everyone's talking about a bubble, but what if the smart money is actually leaning into it? Today, we're going to break down that wild idea and see what it means for your moves in stocks, crypto, and even gold.
Okay, let's just cut right to the chase. This is the question on everybody's mind, right? Are we staring down the barrel of an AI bubble? And more importantly, what are you supposed to do about it? The headlines are all doom and gloom, but man, those returns are just impossible to look away from. So, is it time to panic, or is it time to participate?
Now, check this out. This quote from a Wells Fargo strategist just perfectly sums up the whole situation. It sounds totally nuts, doesn't it? Hey, there's a bubble risk, so you should buy. It's a paradox, and it's exactly what we're going to unpack right now. So let's get into this AI bubble paradox. How on earth can investing in what might be a bubble actually be a smart move? Well, it all starts with understanding an idea that's been around for a while. This isn't our first rodeo with this kind of market frenzy. Former Fed Chair Alan Greenspan had a great name for it: irrational exuberance. It's that feeling, that almost electric excitement that just sends prices into the stratosphere. And guess what? We're hearing that same language again today, with top central bankers warning that stocks are looking pretty expensive. But this is where the strategy gets really interesting. Okay, so here's the core logic. The play isn't to pretend a bubble doesn't exist. It's to embrace it. If you look back at history, some of the most mind-blowing gains, the really explosive growth, happens as the bubble is inflating, right before it pops. The whole idea is to ride that massive wave up and, of course, have a plan to get out before it all comes crashing down. So, if you're going to try and ride this massive tech wave, how do you do it without getting wiped out? Well, it really comes down to picking the right way to get in on this tech surge. You've basically got two main paths. You could try your hand at picking individual AI stocks, but let's be honest, that's a high-risk, high-reward game. It takes a ton of research, and for every big winner, there are going to be plenty of losers. For most people, the smarter, simpler move is to invest in something like the Nasdaq index. It lets you buy the whole tech sector, spreading your risk out while still capturing that powerful upward trend. So what does this mean for your portfolio, practically speaking? Well, one strategy is to think about shifting some money from broader funds like the S&P 500 and focusing it on tech-heavy indexes like the Nasdaq 100. That move puts you right in the eye of the storm, right where all the momentum is. But, and this is super important, stay away from leveraged funds. Seriously, with the market this high, using leverage is just way too risky. We're talking about being strategic, not reckless. Okay, let's switch gears. What about crypto? Does it have that same kind of momentum? Let's do a quick technical check and see if we're looking at the same picture or something totally different. The crypto market is in a really weird spot right now. On one hand, we have positive global liquidity, which just means there's more money sloshing around the system. And that should be a huge boost, but at the same time, the market just can't seem to get its footing since that last big sell-off. It's a real dilemma. And this really lays out the whole story. If you look at the technicals, both Bitcoin and Ethereum are still flashing sell signals. For us to get a buy signal, we need to see a real, confirmed break above those key levels. We're talking about 113,000 for Bitcoin and 4,230 for Ethereum. XRP looks a little better, but it's also kind of stalled out. So the big takeaway here? Patience. Don't rush in until the trend proves itself. All right, last but not least, let's talk precious metals. Gold and silver have had a monster run. So the question is there still gas in the tank, or has this rally finally run out of steam? For both gold and silver, the verdict right now is pretty straightforward. Just hold. Gold has run up against some very strong resistance after its big move, and silver is getting close to its price targets, but it's looking overbought, which just means it's gone up too much, too fast, and it's probably due for a little break. This is not the time to be chasing prices. The smart move is to hold on and wait for a pullback to find a better entry point. Okay, so we've looked at the incredible momentum in tech, the wait-and-see game in crypto, and the pause in precious metals. Let's pull all of that together into one clear, simple action plan based on what we're seeing right now. So let's boil it all down to the essentials. Right now, the clearest action is to focus on where the momentum is strongest, and that is absolutely in U.S. tech stocks through the Nasdaq. That's where you want to be to ride that AI wave. For everything else, crypto and precious metals, the name of the game is patience. Hold what you've got and just wait. Wait for a confirmed uptrend in crypto and wait for a better price on metals before you commit any new cash. So, that's our game plan for navigating these markets today. It's all about riding the momentum where it's hot and being patient where it's not. Thanks so much for joining our channel, and if you got some value out of this, we'd really appreciate it if you'd subscribe and like this video. It helps a ton. We'll see you next time.